Welcome back to Investing Talk podcast. Today, we're going to be talking about SEALSQ,
Okay.
ticker symbol LAES.
Interesting company.
Yeah, they're doing some really interesting things in the world of quantum-safe semiconductor technology.
Yeah.
We're going to talk about stock surges,
Okay.
groundbreaking partnerships, and yes, some of the potential risks that investors like you need to be aware of.
Sounds good.
So let's start with the buzz.
All right.
SEALSQ stock jumped over 9% yesterday, December 27th, and over the past 6 months, it's gone up 224%.
Wow.
What's driving this momentum?
Well, one major factor is the recent $60 million funding round they secured through two separate registered direct offerings.
So $60 million.
That's right.
Wow.
And, this is going to be crucial for advancing their post-quantum semiconductor technology.
Okay.
And clearly, investors are seeing massive potential here.
Yeah, it seems like this is a huge vote of confidence from the investment community that SEALSQ is going to be a leader in the future of cybersecurity.
Absolutely signals that investors believe that they have what it takes to compete in this market that's only going to become more and more important as quantum computing becomes more prevalent.
And speaking of positive signs, SEALSQ also just regained compliance with Nasdaq's minimum bid price requirement.
That's a good sign.
Yeah, for a while there was a real risk of them being delisted.
Right. Falling below that $1 threshold can be a major red flag for investors.
For sure.
It signals instability and raises doubts about the company's long-term viability.
So regaining compliance means that they can focus on their long-term growth strategy and avoid the distractions and negative perceptions associated with a potential delisting.
Exactly.
Now, this stability also allows SEALSQ to focus on strategic partnerships, and one that really stands out is their collaboration with Hedera to develop quantum-resistant semiconductors.
Interesting.
What makes this partnership so significant?
Well, this is where things get really interesting.
Okay.
Quantum computing has the potential to completely disrupt our current cybersecurity infrastructure. Yeah, the encryption methods that we rely on today could be easily cracked by these powerful quantum computers in the future.
Oh, wow.
So SEALSQ is positioning itself alongside Hedera to address this looming threat.
So it's almost like they're building the digital locks for a future where the old keys just won't work anymore.
That's a great analogy.
That's kind of what it seems like.
SEALSQ is essentially developing the security solutions we'll need in a world where quantum computers are the norm.
Okay.
And partnering with Hedera is a smart move.
And why is that?
Well, they're leaders in the distributed ledger technology space, which is closely related to blockchain.
And blockchain is all about security.
Exactly.
Okay, so there's a natural synergy there.
Yeah.
But let's get down to brass tacks.
Okay.
How are SEALSQ's financials looking? We know they have this innovative technology.
Right.
Are they a solid investment?
Well, that's the million-dollar question.
Yeah.
On the one hand, they have a low price-to-sales ratio of 0.30,
Okay.
which could suggest they're undervalued, but...
That's right.
Exactly. While that low PS ratio is intriguing, it's important to dig a little deeper.
Okay.
Remember, their revenue actually declined recently with the quarterly growth rate of negative 67.3% year over year.
Oh, wow.
That kind of drop is certainly a cause for concern.
So that low PS ratio might actually reflect the market's uncertainty about SEALSQ's future revenue growth.
Yeah, could be.
They're banking on a strong second half of 2024 and a robust business pipeline, but that remains to be seen.
Right.
Now, we also need to talk about their debt-to-equity ratio, which is a rather hefty 3.76.
That's right. That high leverage raises questions about their long-term financial stability.
So essentially, they're relying heavily on borrowed money to finance their operations,
Yeah,
which can be risky if things don't go according to plan.
for sure.
And if we will look at their profitability, well, the picture isn't exactly rosy. The return on equity is a staggering negative 574.40%.
Yeah, you don't want to see that.
Yikes. That's not a number you want to see.
No.
It essentially means they're losing money at an alarming rate. So it's a mixed bag. They have this groundbreaking technology and strong partnerships, but their financials raise some serious red flags.
That's a good way to put it. I wouldn't call them a sure thing by any means.
Right.
But, with their innovative approach to a problem that's only going to become more significant, they're definitely a company to watch closely.
Definitely a company to keep on your radar.
Yeah.
So for our listeners who are intrigued by SEALSQ, what's the one piece of advice you would give them?
I would say do your homework. Don't just jump in because of the hype. Take a deep dive into their financials, understand their technology, and carefully consider their long-term prospects before making any investment decisions.
Makes sense.
Remember, investing in emerging technologies always comes with risks, but it can also be incredibly rewarding.
Excellent advice.
Yeah.
Always do your due diligence. Now let's shift gears a bit and take a closer look at the technology behind SEALSQ's quantum-resistant semiconductors. What exactly are we talking about here, and why should investors care?
This is where things get really exciting from a technological perspective. Imagine a future where quantum computers are commonplace.
All right.
These incredibly powerful machines could easily crack the encryption methods we rely on today to protect our data.
Oh, wow.
Everything from online banking to national security could be at risk.
So SEALSQ is developing technology to protect us from this potential quantum apocalypse.
Exactly. They're working on semiconductors that are specifically designed to be resistant to attacks from quantum computers.
Interesting.
It's a complex field, but essentially they're trying to create the next generation of cybersecurity, a system that's future-proofed against the threats of tomorrow.
That's a fascinating concept. It's like they're building a digital fortress to protect us from a threat that most people aren't even aware of yet. So we've got this exciting technology, a strategic partnership with Hedera, and a stock that's been on a tear. But we also have some concerning financial indicators.
That's precisely the dilemma with SEALSQ.
Wow.
There's a lot of potential upside, but there are also legitimate risks. They're a young company operating in a rapidly evolving field. It's a high-risk, high-reward scenario.
So it's not a slam dunk investment by any means, but it's certainly a compelling story. Stay tuned as we delve deeper into the financials, analyze their partnership with Hedera, and explore the broader implications of their quantum-resistant technology in Part 2 of our discussion on SEALSQ.
What's so fascinating about SEALSQ's technology
Yeah.
is that it's not just about protecting data in some, distant future. It has real-world applications right now.
Okay, so I was thinking this was all very future tech.
Right.
But you're saying that there's a need for this kind of security like today.
Absolutely.
Interesting.
Think about things like power grids,
Okay.
financial systems communication networks.
Right.
These systems are already targets of sophisticated cyber attacks.
Yeah, for sure.
Now imagine those attacks being amplified by the power of quantum computers.
That's a scary thought.
Right.
So SEALSQ is developing technology to kind of safeguard these systems against those kinds of threats today.
Exactly. And that's a huge market opportunity. As the world becomes increasingly reliant on digital infrastructure,
Yeah.
the need for quantum-resistant security is only going to grow.
Right. Okay. So we've established that SEALSQ is addressing a very real problem with this potentially game-changing technology.
Yeah.
But let's get back to those financials.
Okay.
In Part 1, we talked about some key metrics, their market cap and their enterprise value. Can you break those down for our listeners who might not be familiar with these terms?
Of course. Market cap is essentially the total value of a company's outstanding shares.
Got it.
For SEALSQ, that number is currently around $264.84 million.
Okay.
Gives you a sense of the overall size and perceived value of the company in the eyes of investors.
So a higher market cap generally means investors are more bullish on the company.
Generally, yes. It suggests that the market believes the company has significant growth potential.
And then there's enterprise value, which for SEALSQ is very close to their market cap.
Right.
At $265.61 million.
Yeah.
What's the difference between these two figures, and what does it tell us about SEALSQ?
So enterprise value is a bit more comprehensive than market cap.
Okay.
It takes into account not only the market value of the company's shares, but also their debt and cash holdings.
Got it.
It gives you a more complete picture of what it would actually cost to acquire the entire company.
Okay, so in SEALSQ's case, the fact that their market cap and enterprise value are so close means that they don't have an excessive amount of cash on hand or a mountain of debt.
Yeah.
That's significantly skewing their overall valuation.
That's right. It suggests a relatively balanced financial position, at least in terms of their debt and cash holdings.
Got it.
But as we discussed earlier, that debt-to-equity ratio is still a concern.
Right. That 3.76 debt-to-equity ratio suggests they're using a lot of borrowed money to fuel their growth.
Yeah.
Now let's talk about that low price-to-sales ratio of 0.30.
Okay.
You mentioned earlier that it could signal undervaluation.
Right.
But it's not always a clear-cut buy signal.
Right.
Why is that?
Well, a low PS ratio can sometimes indicate that investors are skeptical about a company's future revenue growth.
Okay.
And in SEALSQ's case, that recent revenue decline we mentioned is likely contributing to that low PS ratio.
So investors might be hesitant to give them a higher valuation because they're not sure if SEALSQ can turn things around
Exactly.
and generate sustainable revenue growth.
It's a wait-and-see situation.
Okay.
The market wants to see if they can deliver on their promises of a strong second half of 2024 and a robust business pipeline.
Okay, so we've got this tension between a company with this potentially groundbreaking technology
Right.
and a stock that's been on a tear,
Yeah.
but also some real concerns about their financials.
Yes.
How do we reconcile these seemingly conflicting signals?
That's the challenge, and frankly, the excitement of investing. It's
Mhm.
about weighing the potential rewards against the very real risks.
Right.
With SEALSQ, you have a company operating in a nascent market
Okay.
with huge growth potential, but their financial health raises valid concerns.
It sounds like they need to prove they can translate their technological innovation into actual sustainable profits.
That's the key. They need to show investors that they can execute their business plan and generate revenue growth that justifies their valuation.
Now let's zoom in on that partnership with Hedera.
Okay.
We talked about them being leaders in the distributed ledger technology space, which is closely related to blockchain.
Right.
For those of us who aren't tech experts,
Yeah.
can you explain why this partnership is so significant for SEALSQ?
Sure. Hedera's platform is known for its speed, security, and scalability.
Okay.
It's used by a variety of businesses and organizations
Got it.
for applications like supply chain management tokenization, and importantly for SEALSQ, data security.
So by partnering with Hedera, SEALSQ is tapping into a proven platform
Yeah.
and a network of potential customers
Right.
who are already familiar with the benefits of distributed ledger technology.
Precisely. It gives them credibility and a potential path to market for their quantum-resistant solutions.
And remember, Hedera is a leader in security within the distributed ledger technology space.
Yeah.
That expertise complements SEALSQ's mission perfectly.
Exactly. It's a strategic alliance that could give SEALSQ a significant advantage in the race to secure a post-quantum world.
So for investors who are considering SEALSQ, this partnership should be a major plus.
Yeah.
It shows that they're not just developing technology in a vacuum,
Right.
but they're actively building relationships and creating pathways to bring their solutions to market.
Absolutely. It demonstrates a strategic mindset and a willingness to collaborate,
Right.
which are essential qualities for any company operating in a rapidly evolving industry.
Okay, so we've talked about the technology, the partnership, and the financials.
Right.
But what about the broader market context?
Yeah.
SEALSQ is operating in a sector that's notoriously volatile.
Yeah, that's true.
How might that impact their stock price and their long-term prospects?
That's a great question. The tech sector is known for its rapid innovation and its susceptibility to market swings. Factors like interest rate hikes, inflation, geopolitical events can all create headwinds or tailwinds for companies like SEALSQ.
So even if their technology is sound and their management team is solid, these external factors could still significantly impact their performance.
That's right. It's a reminder that investing in emerging technologies always carries a certain level of risk.
Yeah.
You need to have a strong stomach for volatility and a long-term investment horizon.
It sounds like riding a roller coaster. You might experience some thrilling highs, but you also need to be prepared for some stomach-churning drops along the way.
That's a great analogy.
That's kind of what it seems like.
And let's not forget that SEALSQ recently faced the very real risk of being delisted from the Nasdaq.
Yeah.
Because their stock price dipped below that $1 minimum bid requirement.
It was a close call, and it highlights just how volatile their stock price can be.
Yeah.
It's been up over 200% in 6 months.
Right.
But it's also been down to a point where delisting was a real possibility.
It's a reminder that investing in a company like SEALSQ is not for the faint of heart.
Right.
You need to be comfortable with significant price fluctuations and have a strong belief in their long-term potential.
It sounds like we've covered a lot of ground here.
We have.
What are some of the key takeaways our listeners should keep in mind when considering SEALSQ as a potential investment?
I think the most important takeaway is that SEALSQ presents a compelling investment case.
Okay.
But it's not a slam dunk. They have a lot going for them.
Yeah.
They're operating in a high-growth market with a potentially game-changing technology. They've secured significant funding and formed a strategic partnership with a proven leader in the distributed ledger technology space.
Right.
But
there's always a but.
Of course, their financial health raises some red flags, and their stock price is incredibly volatile.
Yeah.
They need to prove they can translate their technological innovation into sustainable revenue growth and manage their debt effectively.
So it's a story that's still being written. It'll be fascinating to see how it unfolds.
Absolutely. Stay tuned as we wrap up our discussion on SEALSQ in Part 3, where we'll explore the broader implications of quantum-resistant technology and offer some final thoughts on their investment potential.
What strikes me is that SEALSQ isn't just chasing the latest trend.
Right.
They're tackling a problem that could really change our future.
Yeah, you're absolutely right. The rise of quantum computing is a paradigm shift.
Yeah,
It's going to force us to rethink how we approach cybersecurity.
for sure.
SEALSQ is at the forefront of that shift, and their success or failure
Yeah.
could have ripple effects throughout the entire digital landscape.
It's almost like they're playing a high-stakes game of chess,
Yeah,
anticipating moves that haven't even been made yet.
that's a great way to put it. They're trying to stay one step ahead of a threat that most people don't even fully understand yet,
Yeah.
and the stakes are incredibly high.
Right.
Imagine a world where financial systems, critical infrastructure, even national security could be compromised by quantum hackers.
It's a scary thought.
Yeah.
It makes you realize just how important their mission is.
It is.
They're not just building a business.
Right.
They're building a digital shield for our future.
Precisely. And that's what makes them such a fascinating company to watch.
Yeah.
They're operating at the intersection of cutting-edge technology, global security, and high finance.
Okay, so we've analyzed their technology, dissected their financials, and explored their strategic partnership with Hedera.
Right.
What role do you see companies like SEALSQ playing in shaping the future of cybersecurity?
Well, I think SEALSQ is a prime example of how innovation is often driven by necessity.
Okay.
As quantum computing advances, the vulnerabilities of our current cybersecurity infrastructure will become increasingly apparent.
For sure.
Companies like SEALSQ, who are investing in quantum-resistant solutions today, will be the ones who define the security landscape of tomorrow.
It's almost like an evolutionary arms race.
Right.
As the threats evolve, so too must the defenses.
Exactly, and that's why investors should be paying attention to this space. Quantum-resistant cybersecurity is not a niche market.
Right.
It's going to become the standard.
So for our listeners who are looking for investment opportunities with the potential to generate significant returns,
Yeah.
SEALSQ might be worth a closer look.
I would say so, but with a caveat.
Okay.
Remember, investing in emerging technologies always carries a certain level of risk.
Yeah.
SEALSQ is no exception.
Right.
Their financials are a bit shaky, their stock price is volatile, and their success is far from guaranteed.
So it's a classic high-risk, high-reward scenario.
Precisely. But for investors who are willing to do their homework,
Yeah.
who understand the technology and who have a long-term investment horizon, SEALSQ could be a very intriguing opportunity.
Excellent insights.
Yeah,
It sounds like SEALSQ is a company that could go in any number of directions.
for sure.
They could become the next cybersecurity giant, or they could stumble and fade into obscurity.
Right.
It's a story that's still being written, and we'll be watching closely to see how it unfolds.
I agree. It's a story with a lot of potential plot twists, and that's what makes it so captivating.
And that is the beauty of the investing world. It's a dynamic, ever-changing landscape where fortunes can be made and lost. But with careful research, a bit of luck, and a long-term perspective, you can navigate those turbulent waters and emerge with a portfolio that reflects your goals and your vision for the future.
Well said. It's been a pleasure diving into the fascinating world of SEALSQ today.
Thanks for joining us for this episode of Investing Talk Podcast. We hope you found our discussion informative and thought-provoking. And if you're interested in learning more about SEALSQ or other companies operating in the quantum-resistant cybersecurity space, we encourage you to do your own research and consult with a qualified financial advisor. Remember, investing involves risk, and past performance is not indicative of future results. As always, the information provided in this podcast is for educational purposes only and should not be considered investment advice. Before we sign off, we'd like to remind you to subscribe to Investing Talk Podcast, share this episode with your friends, and leave a comment with your thoughts on SEALSQ. We appreciate your support and look forward to connecting with you again soon.
Until next time, happy investing.